Hello, Warriors. Everyone doing okay? Anxiety filled weekend, watching the news. So I didn't short it, but I do remember saying right in here, why is everyone bullish silver? So gold, pretty ugly month. So what's actionable in this kind of environment? Well, this is something I'm looking at with all the destruction going on in the market. Although the yen has come back down, it's back at some support levels right here. And with everything that the hi DJ, with everything that the Fed did, when you look at yields, I know yields are down in the 30-year, but to me, it looks like so far all we're doing is correcting what's going on here after the exhaustion spike low in yield. So we'll see. Maybe we get some type of this is A and we get B and then we get C, but it doesn't look like we're going to make a new low. Um, there's some different opinions that we're still going to get one more high in this in the T note, which is a 10-year. I'm not sure. I'm not sure about anything right now. So, I really think you just have to be opportunistic. So, I may be looking for a buy in the end because even though we're down sharply from the recovery high, and this was a very important level, and you could probably, if you're a bear, you'd be looking for maybe something like this from here. But I do think that the last few weeks, by putting in this higher low last week, and now it looks like we're going to put in the second higher low in here. I don't think it may not be here, but it could be around, 105.30, 105. It's going to be a pretty important area to me. So that's something I see. Euro USD, I'm not sure that we're done. I'd like to see it sell a rally in the euro, but it would be up maybe around 113. You know, do your fibs here on euro. If the dollar is going to continue to blast, I would use dollar weakness or euro strength to sell into sometime this week. But off the gun, I didn't do anything last night, and then waking up in the morning, there's nothing that's really, it's kind of hard just to get your bearings with everything that's going on. You don't know how the S&Ps are gonna open. Does anyone know how they're gonna open? So Friday's rally back over the throwover line, definitely after the Fed moved, what they really are showing is panic. The last time the Fed moved on a Sunday night. I know I'm showing guys. I know I'm showing my Twitter feed right now, but I just want to give everyone a history lesson real quick. As the last time that the Fed moved on a Sunday night was here. There's so here's the last time the Fed did something on Sunday night. So anyway, that's the Fed in the old days. No, I don't remember that. Okay, because they're what? Eliminating mortgage interest payments? Okay, I don't know what kind of emergency measures they're gonna take, but, just getting back to the markets, this is one of the things I see. I wanna look to buy a break in the yen. I wanna look to, sell strength in the euro. I'm just not there yet, so, it's hard for me to do nothing, but I'm gonna do nothing. I'm sure, I the room was really energetic last night, and people scalping, and that's really what you have to do in this environment. One of the best scalpers I know is Blake Morrow, so I'm going to bring Blake in, and you guys could get a pro's view on how he's handling all this volatility. He's thriving in it. Did you have a great night last night? Did the room do okay, Blake?
Hey,
Hey,
man.
buddy.
Hold on.
Okay. Want me to
Yeah,
go
continue
on
on
for a
for a
while?
second,
Go
please.
go
Thank
ahead.
you.
Okay. Oh, how I made it through the bubonic plague.
I already answered to that.
Oh, how
You
did
were
I
too
do
busy
it?
fighting in the Crusades.
Oh yeah, I need to have a mission. I mean, I was the only Jewish guy in the Crusades.
Yeah.
You know, but I wanted to go to my home. They were going to my homeland, so I joined. Yeah.
So it was a
And
good opportunity,
I,
to visit for free without paying a ticket.
yeah, I mean, my butt was sore. I really don't like riding horses. I prefer. I was born for my time. Like, give me a car. But anyway, yes, Steve. And it was dusty and no air conditioning. Anyway, it was tough for a guy like me. So, did anyone watch the week ahead video? The point I want to make is that great traders and analysts are also preppers too. So if you watched it, I mean, there are a few things, Greg had to guess what was going to happen. Really hard to guess what's going to happen. If someone had told me silver was going to be down over $2 this morning, I would have, said, that's hard to believe. But I really think you have to be careful in here. Steve, do you know how the S&Ps are going to open? I mean, they're going to open.
As it seems, limit down to begin
Okay,
with.
so what's that? 7%?
Five is the first circuit breaker, and then after
Okay.
like 10, 15 minutes, they are allowed to go down another 2%.
Yeah.
Then we have another circuit breaker,
Yeah.
and after that it's 13%. The next
What could the
circuit
Fed
breaker.
say since they've done everything now at their meeting this week?
First of all, I said it again when they did the emergency meeting.
A week ago or so?
A
It
week
seems like,
ago.
yeah.
That these kind of moves
Or
create
desperation. Yeah.
panic because they show this desperation.
Yeah.
Add to that the fact that in this case, we had an emergency decision just 3 days, 2.5 days
Yeah.
before their official meeting. So
Yeah.
imagine how desperate you look when you
Yeah.
have to have a second emergency
Yeah.
cutting another percent and bringing rates back to zero.
I couldn't believe it when Amanda said,
To be
I said
exact,
on a Sunday night. Yeah.
0.125, as it was during the previous
Yeah.
financial crisis. So imagine how desperate they look when they're obviously displaying that waiting another 2.5 days, in their opinion, was too much.
Yeah.
Add to that the fact that they threw $700 billion of
Yeah.
quantitative easing with the promise for that to expand, indefinitely. And you have all you need in the mix. Obviously, the market has now started getting really worried that the issue is becoming an issue of survival. And I'm not talking about human survival at the moment, because humanity is going to survive. Unfortunately, we're going to have um, small segment of the population dying. Every death is, of course, a tragedy. There is no question about it. But it's not about humanity surviving. It's about the financial markets, because that's the job of the Fed.
Yeah.
And obviously, the market is seriously worried about how that's going to work out. Now, it's more than obvious that we have probably the most coordinated global effort in the history of mankind to tame, this wild beast. And unfortunately, I'm going to say what we were saying in advance. When you have markets being a bubble,
Yeah.
this is what happens whenever there is an actual reason for the markets to go down. I mean, when you can't anymore contain it, you have, from a much higher plateau to fall from. And, big part of the problem at the moment is that the underlying economy was extremely sick. extremely sick because it was purely based on very high debt and easy money. And now that we have a problem in hand that can't be fixed by debt and easy money, this is what happens.
The president thought we'd have a real big update because when he was doing his news conference on coronavirus, he was so happy about hearing what the Fed did, and I wonder if he was surprised that we're limit down even after
Yeah,
that.
don't get me talking about Trump because I don't want to make this a political issue.
Okay, well,
Honestly.
anyway, just like everyone else, he could be wrong about a market move too. So anyway, you're
I think he
trading a
should
lot. Are you?
focus.
Huh?
Currently, he should focus more on other things.
Yeah. Were you trading last night, Steve?
If I did something last night, no, I didn't
You
do
did
anything
nothing?
last night.
Are you
I
having
started doing
go ahead.
doing stuff this morning though because I do see a lot of bargains out there. For example, I bought myself at $600 a little bit of platinum because
Okay.
just to give you an idea, platinum has been cut in half, literally cut in half during the
Yeah.
past month.
Yeah.
Platinum is
Wow.
currently trading at a much lower price than its cost of production. Of course, as we were having this discussion in the chat room, which is very live since yesterday night, obviously, there are commodities that in the past have traded, at a steep discount to their cost of production. But common denominator in all cases is that this is only a temporary phenomenon. You know what I mean?
Yeah.
I mean, you can have forever any tangible asset exchanging hands at prices much lower than what you need to actually produce it.
So right now we're in the middle of a deflationary move or deflationary
I doubt it,
recession.
Dale. I think
Well,
we are in the middle of huge fears and jitters that we are going to have a deflationary crisis. There is a big difference. So the market
oh,
is currently pricing in that what happened during 2008 is going to happen this time again. So that's why they're killing metals, etc., etc. But if you remember, as we've said, before this began, I don't think that this time around we're going to have the same thing that we had in 2008. So personally, I believe that the market pricing in that kind of an outcome creates huge long-term opportunities.
well, why couldn't we have what happened that? Because they don't have as many tools. They're starting from a lower level. I know they've thrown the kitchen sink, they being central bankers. But if they're pushing
Because
on a string, go ahead.
This time around, they're going to kill the drug addict with, a huge overdose of drugs. Plus, the fact that this time around, we have a really big supply side disruption.
Okay, so that's going to be deflationary. So inflationary. So the shortages are going to bring about an inflation spike. Is that the thesis?
And I think that once the coronavirus issue recedes, which of course it will, nobody can tell you if it's going to be in 1 month, in 2 months, in 3 months, in 6 months, but it's not going to be more than that. I think that during this year, during 2020, in most likelihood, we will have gone back to normalizing, our lifestyle, more or less. So once this happens, the huge amounts of liquidity will have stayed in the system. Supply will need more time to be restored to normal, and demand is going to immediately go back to where it was, perhaps even higher. So I think
I can
that
understand.
I think that we are quite likely to see something totally different this time around.
Thank you. Blake, you cool? It's okay. Why don't you pull up your charts?
Sure, absolutely.
okay.
I'm actually trying to get out of a trade here. I picked up some dollar yen on this right here, actually, of this IMF is ready to mobilize 1 trillion loan capacity to counter virus, and it's not moving, but I don't want to sell it. But don't know if I really want to stay in it either. So I'm just trying to, it's because it's a kind of sizable position. So Steve, do you mind taking over this morning?
Absolutely not,
I'm here to-
Blake.
Are you
when,
kidding me? This
when
is
you're ready,
this is like a birthday for Steve.
All right.
when
To
you're
get an
ready,
extra
just
20 minutes.
Yeah.
when
Yeah.
you're ready, just
I'll let you know
jump
when I
on.
get out of this thing. Okay.
All right,
yeah,
go ahead.
absolutely. We'll be
All
here.
right.
Good
All right,
morning,
see if I can
guys.
put your
I'm here
charts
too.
up. Hey, Stel, how are you, buddy?
Good
I'm
morning,
very good,
Stel.
thank you.
So, Stel, what do we have before we go to the charts? I mean, anything else besides what everybody knows? I mean,
Do you
what
think that
the
was a rhetorical question, Stel, when Blake asked Steve if he would mind talking for a while?
Yeah, good question. So what do we have? I mean, you know, we're seeing just like I wrote on the newsletter, we're seeing everybody trying to get out of the same door, and you know,
Yeah, and
we
it
talked
suddenly
about
seems
this
too small, eh?
yeah, and we talked about this for months and months. Remember, guys, on this webinar, we were saying, look, these markets are very elevated. When the time comes, everybody's going to leave at the same time. And first of all, there are going to be people who are still going to be buying the dip. And, you know, from what I read, people are still trying to buy the dip. And this.
Wish I
this
still had
is,
my 33.90 shorts in S&Ps.
oh my God, yeah. So it's this is not over. I don't think it's over. They're throwing the kitchen and sink at it now, and they have to. But I tell you what, we were talking about this on the chat room earlier. I said, look, I think there's only one thing that can actually stop this equity route, and this is if the Fed goes full Japan and they start buying equity ETFs. If you
Okay.
do that, obviously, or S&B, obviously, if they're buying the stocks, then the stocks are going to go up. But it has to be a change
Yeah,
in.
just a small parenthesis, tell you here.
Yes.
And it will play a huge role in the end. For people that don't understand what that means, first of all, as I said some time ago when that was asked, I said I think that it's not legal for them to do it in the US, and they was right. The Fed does not have the authority to buy stocks or ETFs or whatever. So they will need congressional approval. And first question is if they're going to get it or not. But even if we assume that we get it, then I hope everybody realizes what that means. What do you think it means when you allow for a government, because let's be honest with each other, central banks are a branch of the government, right? I hope there isn't anybody that doesn't realize that. So what happens when you allow a branch of the government to actually take hold the factors of production? I mean, Americans are proud, most Americans are proud to say that socialism never took hold of the US, even when it was popular, you know, in several areas of the globe. But if this isn't socialism, I have no idea what it is. So in essence, you will be allowing for an entity that can create money out of thin air and in essence belongs to the government to buy up private companies and the factors of production. I mean, this is the dream of Karl Marx. So if you think that can work in the end, I don't know. I have a bridge to sell you.
Yeah, that's a good point. I'm not saying it's the right thing to do for sure, but I was just thinking, you know, if there's anything that
No,
can
I also
stop,
believe that temporarily it
yeah.
will put a backstop. I'm with you, Stelio.
Yeah,
The
and my
question is,
argument,
what are the long-term repercussions of doing that?
my argument with the people that were talking about it on chat room was this thing, if it's temporary, it actually never will be temporary. Just like the debt monetization, just like everything.
You
just
remember
like
how
zero
many times I've
rates.
talked about Bernanke's in the past,
Yeah.
Bernanke's
Yeah.
testimony to Congress in 2008, whenever it was, when there was a Republican congressman asking him, like, wait a second, what you're doing, isn't this debt monetization?
Yeah.
And he was like, no, this is absolutely not debt monetization, because it would be debt monetization if we were actually buying up government debt to hold it. But we're not going to be doing that. This is only an emergency measure. We're going to be buying up government debt temporarily. And as soon as the emergency is over, we're going to sell it back in the market.
Yeah, exactly, as it panned out.
Yeah.
But I said again today in the chat room, I said, look, I think this is the only way they can stop it. But my view is what they should do is let the market balance itself. Where is the balance? Is it 2,300 S&P? Is it 1,800? Is it 666? I don't care. The market will balance itself after a while. Valuations are going to look attractive. People are going to be talking about future cash flows, dividends, all that. The market always balances itself. Just let it be. If central banks hadn't intervened so much over the last 10, 20 years, we wouldn't be in this situation. But anyway, you know what they're going to do? They're going to do more and more of the same until I don't know when. Until we're all
Until
dead.
it's obvious that more and more is a poison and not a cure. Because that's exactly what it is. You indirectly now mentioned, Stelios, how brutal the business cycle has become. We have transformed the business cycle from a business cycle to a boom bust cycle. And that's not by accident that it happened since central banks started intervening so much. Because in essence, what they're doing is that every time they're like, oh, in order for the market to fix this problem on its own, we're going to have to go through a period of pain and adjustment. But we don't want to do that, right? So let's see, how can we fix this ASAP? Throw some money in it. And then the underlying problems become bigger. So the next time you're faced with this dilemma, you're like, okay, we did something last time around when the problem would have been much smaller. So we definitely need to do something this time around because the problem is going to be bigger. And they intervene again. And next time, the problem becomes even bigger. And at some point, they won't be able to fix it. And then we're going to have all the pain that was avoided during the past decades coming, all the chickens coming home to roost, all the pain in one financial crisis, which unfortunately is going to also turn out to be a huge social crisis.
Yes, that's actually quite likely, unfortunately. Anyway, what do I think going forward? I think we're not at the end. I really don't. Where is the bottom? I have no clue. I mean, if I knew, I'd be a billionaire. But the way and the pace of this, and the sheer how should I say it? The markets basically don't care about what governments are doing. That tells me that there's still a lot of pain. And also, remember, we were talking about a couple of days ago about Fidelity and who else was it? Who were reporting that mom and pop are still buying the dip. So
yeah,
I think we have some way to go. Unfortunately, I think we have some way to go, and I hope it's not too much, but there's going to be pain for sure.
Steve brought up Karl Marx. To me, it's more like the Marx brothers handling this right now.
Groucho, yeah.
Yeah, all of those guys.
Yeah.
Yeah, just look at DAX. I mean, just look at this chart, right?
Niagara Falls.
Just look at the FTSE.
Wile E. Coyote.
And the DAX is actually hitting just these lows now from a couple of 2-3 years back. You have them on your chart. So yeah, it's where you have the zone basically. Yeah.
Yeah.
So it's very scary to look at.
It is brutal. It is brutal. I mean, these were the 2014 lows. It took us 6 years, 5.5 years to move from here to there. And all those were given back within 3 weeks. And this is what we kept warning again and again and again. I'm proud to say that I don't think there is any face webinar listener here that, hadn't heard at least 100 times that don't try to pick pennies in front of the upcoming train. Because when this monster turns around, you won't be able to exit. And this is another example why paper profits are called paper profits, because there were a lot of people up there that thought that they have a little fortune, and they could never guess that 2 or 3 weeks later, that little fortune could have been cut in, let's see how much lower we've been, almost 40% from the highs in 3 weeks. Just look at this. Actually, no, because I didn't grab it right. Let me see.
That's a pretty big wealth transfer there, isn't it?
39.5% lower in 3 weeks. How much time did it take to go 39.5% higher?
Yeah, all that time. It reminds me of 2008 and 2000. Actually, I was around for it. And a lot of people, when the market started to come down, and I would say, well, why not just get liquidate? A lot of people would say, well, I don't want to pay capital gains. So I'm sure there were plenty of people that, didn't want to book profits, tremendous profits they had because of capital gains. Now they don't have to worry about that anymore.
Wow, that's not the,
For sure not.
not the
Yeah.
reason to stay into stocks.
But I'm telling you,
Yeah.
I deal with, had my own IB sell. You don't know how many people came in and said, well, what do you think of the market? I would say, well, get out. They go, yeah, but I don't want to pay the taxes.
Wow.
I said, well,
Okay,
okay.
problem
Yeah.
solved. Now you don't
Yeah.
have any taxes to pay.
That's right.
By
Wow.
the way, next big downside support for the DAX, since we're here, so we can shift, into charts, is at 7,500, where we find the 61.8% fib. Guess from where? From the 2009 low. And if you notice, it's not just the 61.8, also the highs up here, the low down there. So, generally a very interesting support area. Now, clearly, with this type of momentum, we can be there during this week easily. And I'm saying during this week, we can be there tomorrow. But I'm saying during this week because I take into account that, during periods of extreme volatility, as we've seen, you might have sharp up days, sharp down days, exchanging with each other. So I wouldn't be surprised if we see tomorrow being like 5-6% higher, and then the day after being like 8% lower. I mean, this is the type of environment you're into at the moment. So you have to expect that you might also see some very sharp pullbacks. Keep in mind, we said that since the very, very beginning of this, some of the biggest rallies, you find them during brutal bear markets. So, you have to expect that, and you have to adjust your size position accordingly. I mean, if when we were trading there with the type of volatility we had, which was like literally as close to zero as it can happen, you had X size of a position being your normal position, you can be using the same type of a position, when you have days that can be 10% higher or 10% lower, right? Because you're either going to make shitloads of money one day, or you're going to go to the woodshed the next day. So, if you want to play the long game, which is, that is what trading is, playing the long game, you need to adjust your position size accordingly. So you can be there tomorrow, even if, things don't go well a day or a couple of days, right? Okay, that's why, for example, today, I bought 1/3 of a position, as I wrote in the chat room, at 600 and what was it, 604, I think it was. I bought platinum. I bought 1/3 of a position. Why did I buy 1/3 of a position? Because I'm currently almost 10% in the money. The thing is, I could have been 10% out of the money. So would I want to be 10% out of the money at a full position? No, I wouldn't. So I adjusted my position accordingly, right? And I'm not going to feel sorry for myself. Oh, you're almost 10% of the money. If only you had a full position. No, because if only I had a full position and it had kept plunging, I would be 10% out of the money in a full position. So as I said, you have to adjust your position size accordingly. Now, the biggest mover today having to do with, adding the surprise element is definitely silver. Silver has been destroyed today. Now, question being, why is something denominated in dollars getting destroyed when, in essence, a few hours ago we had an open admission to what shouldn't surprise anybody, that there's going to be an infinite supply of dollars. We already discussed that a little bit earlier. I think it's partly it's liquidations, but at a big extent, it's the market believes that we're going to have what we had in 2008, a huge period of disinflation during which real yields might climb higher. I totally disagree with this interpretation, but I guess we're going to find out if I'm right or wrong. Anyhow, I'm looking to be buying metals as I did today in platinum. I'm not selling metals. But I do admit that we can end up seeing lower prices first. And I'm going to give you my downside targets. Let's first see, we have data coming out in 3 seconds. New York Fed manufacturing minus 21.5 versus 4 forecasted. Just let that sink in. minus 21.5 versus positive 4 forecasted. If you remember, I said some days ago that we're going to start having very negative data coming out within the next few days because data are always backward looking. So expect that probably this week we're going to start having the first series of really bad data coming in, and don't expect that to stop for at least a couple of months. So you're going to be seeing numbers, some of which I believe are going to be record all-time lows. I don't know about the specific number. I don't know how. I don't remember, how low it went during the 2008 financial crisis, but I can definitely tell you that some of the numbers we're going to be seeing during the next few weeks, perhaps even few months, are going to be numbers that we've never seen before ever. Now, having to do with downside targets in silver, I think that one potential downside target is 11. Why 11? Because it's a 161.8% extension of this last rebound. But as in essence you mentioned, if we go to the weekly, because we have a friend here asking about it, if you go to the weekly, you're going to see that we have a very interesting support resistance area roughly at $9. So yeah, I think that silver can actually end up trading to $9. It might not. I wouldn't be betting that it's going to go to $9, right? But it can definitely go to $9. Needless to say, I consider these type of opportunities. I wrote that earlier in the chat room. I believe that this type of a market environment, I'm very, very sad that, the cause of this had to be, a disease that is actually, killing human beings. I would have hoped to be an economic reason and a financial reason, which sooner rather than later we would get one without any disease. So it's very unfortunate that, the trigger had to be something like that. But now that this is happening, I think that we're going to find ourselves with generational opportunities. So I think, for example, if we get the ability to buy silver at single digits, that's going to be a lifetime opportunity. And I'm saying that like, with full knowledge of, how big of a statement it is. So personally, I sold palladium. I did very well. And I do think that palladium can keep moving lower because palladium was, in essence, a financial engineered bubble. That's what it was, more or less. But I think that opportunities to buy metals, especially like silver and platinum that have been battered like nobody's business. Just look at platinum. This is the weekly long-term chart of platinum, right? And today the low at platinum was at 560. Just to put it in context, platinum was almost at 1050 February 20th. And 3 weeks later, it was almost cut in half. And we're talking about a real metal that has, amazing properties and is used in not only jewelry, but manufacturing, etc., etc. So, if you think that platinum's long-term value is at $560, good luck, because it isn't. And it's going to be a lot higher at some point in the not so distant future. So I do think that this type of a market environment is going to produce magnificent opportunities. It will probably also create magnificent buying opportunities for some companies, right? So I'm not like, I'm not a believer that all stocks are in a bubble. I actually think that during the bubble, because of the amazing overvaluation of growth, what they call growth to value stocks, there are some value stocks that had been thrown to the garbage for no reason whatsoever. So I think that these type of stocks are going to shine again. So I do think that you will be able to find amazing buying opportunities across the board, as long as you keep your cool, adjust your risk parameters so you can actually be there to take advantage of those instead of blowing up your account and then looking backwards in the future saying, oh, I was greedy and I lost an amazing opportunity because I lost all my capital trying to manage intraday swings at a violent market. Now let me go through some of your questions, because we have so many things to talk about today that even if we had a 3-hour show, it wouldn't be enough. So let me go through covering some of the questions. SPY is showing down nearly 10%, so seems likely to hit level, halt immediately almost. Yeah, might be the case. It might do so. I do think that it's going to be quite easy to hit the second circuit breaker at 7%. Now hitting the third one at 13%. Obviously, that's not going to be an easy task, but nothing is unlikely under such an environment. Pete says Powell FOMC won't hold its planned meeting this week. Yeah, I mean, why hold its planned meeting? What else can they do within this week? I mean, they've already sliced to zero. They've already announced a quantitative easing that is larger than all the previous rounds of quantitative easing combined. So, I mean, yeah, what else could they say in 3 days of time, right? Plus, it's a good opportunity for them to avoid getting a lot of questions. Silver is over minus 15% today. Actually, silver is roughly at minus 20% today if you count the high of the day, because initially gold and silver opened higher. Steve, will you accept Bitcoin in payment for the bridge? Yeah, speaking of cryptocurrencies, Ziggy, I mean, yeah, no surprise there, right? I mean, who would go bid cryptocurrencies? I mean, you can see real assets not even holding up. I mean, why would somebody want digital risk in essence, right? So yeah, I mean, just to put that in context, Ethereum, I'm going to just speak about the two major ones. Ethereum is currently 61% of its highs in 3 weeks. Bitcoin 55% lower.
Hey, Steve, Kirk is just sent me a message. He's calling in. He won't be able to share a screen if he calls in, will he?
If he calls in via phone, no, he won't be able to.
Yeah. Okay.
But why doesn't he have a microphone? I mean,
I don't know. Anyway,
I
I'm
doubt
going to let him know.
If he has, first of all, if he has a laptop, he definitely has a microphone, because every laptop has an embedded one. So try to see if he actually can use a computer that has a microphone or a headset or whatever.
Okay.
Closing for minutes is easier and creates a feeling of floor. The cycle needs to play out, and they will, just like spring comes after winter. Yeah, I'm with you, Ben. All markets are manipulated. Paul Craig Roberts sounds apocalyptic. Yeah, unfortunately, it has apocalyptic elements, right? Flash crash is possible. In essence, what we're seeing is some kind of a flash crash, right? I mean, we already have confirmed the fastest bear market in history. So, take that into account. Forex Gal is saying, how about everyone's 4001k? Yeah, I guess not doing that well, right? Possibility for 955 silver. Yeah, absolutely. We can even see lower than that. We can see 890 is an area of interest.
I think Greg had 850 on his
might be the case.
charts.
James actually says that we had New York Fed manufacturing at minus 34 in 2008. I wouldn't be surprised to see below that at the next print, James. So let's wait for next week's print. Sorry, next month's print might actually be below that minus 34. Gold is easy sell here. Okay, good luck with that, FX trader.
Easy.
Thank you, Hamid. Take on oil and natural gas. Okay, it's quite obvious.
Hey, Steve. Steve, yeah? I'm sorry. I hate to interrupt. I was long dollar yen. I turned around and shorted it. I just closed it for like 25 pips on a short. So now I have to use the restroom. So thank you so much for subbing in. And I just have to reiterate, guys, just remember like what Steve was saying. Volatility is so high that you have to obviously take smaller positions if you can, and or manage them like I'm watching every single tenth of a pip for me, and then then also be really quick to take losses if you got them, and if you see some profits, don't hesitate to take some profits off the table. I mean, I had to stop, reverse my position, and fortunately did pretty good just there on the short. I told everybody in the chat room I reversed short my dollar yen. I just covered it at 40, and but you have to be right on top of your positions here, and um, just don't get too attached to anything. And I'm sorry, I have to run to the
Go ahead,
restroom. It's
buddy.
like I gotta go.
There is
Go,
an
go,
interesting,
go.
Much today.
There's an interesting question from Hamid. Steve, do you see any form of bank failures and banks unable to pay customers' money? Hamid, I don't see. And the reason I don't see is because they don't want to let that happen again. So this time around, they're going to bail out everybody. Let me be very, very clear. The banks, under normal circumstances, all of them almost would fail again during this period, right? And the main reason they would fail again is because many of the sectors they've given huge loans at would fail. So this time around, since they know how toxic it is to offer another bailout to the banks, they're not going to actually offer a bailout to the banks. What they're going to do is they're going to offer a bailout to every industry that would make the banks need a bailout. So I don't expect the banks to need a bailout because they're going to bail out everybody else. That's how I think it's going to go this time around. Possibility for a banking holiday in US if they shut down the financial markets. Ben, I'm not saying that they might not end up closing the markets, but I can tell you in advance that, in my opinion, it's going to be a huge mistake if they close the markets. Because if they close the markets, things are going to go completely out of hand, and it's not certain they will have the ability to open them again under normal circumstances. So needless to say, besides letting capitalism fail once again if they do that, because in essence what they've been doing during the past 20 years is running away from capitalism and trying to find solutions completely out of the out of the book of capitalism, which is weird if you think that the market is a construct of capitalism. So when you're trying to fix a capitalist problem by using other methodologies that are totally uncapitalistic, this is what happens. You get side effects that, first of all, nobody could know in advance because you're experimenting in essence, and who knows how this is going to evolve. So I think that if they take that decision, it's going to be a very dangerous decision to take, and it might not work out as they would expect. It might actually work out the exact opposite way. First of all, if you want to close up the markets, you have two options. Option number one, let that become more or less obvious, because if you start considering it and people realize, what do you think is going to happen? Everybody's going to be selling at any given price point just to get out of the market, right? So if the market sniffs that they're even considering in closing it down, you're going to see a minus 20% day. No questions asked. We're going to hit every single circuit breaker there is in the system. That's number one. Number two, how are you going to reopen the markets then? And how long will it take for them to reopen the markets once that happens? And once you close down the financial markets, how do the companies that actually get funded through them are going to function? So in essence, it is extremely likely, as always, that they will try to solve one problem and most likely creating more than one problems, each of which might be a lot more severe than the problem they initially considered fixing. But let's be honest, that's what government does anyhow. They usually try to fix a problem by creating a bigger one. And then when the bigger problem is obvious, then they come to the rescue claiming that, oh, here we are, don't worry, we have this, we have your backs, we're going to fix it. No bigger example than student loans in the US. The student loan problem is one totally created by government, because government decided to go in the industry of, in essence, guaranteeing loans. And that obviously created excess demand to what would normally be in the market. And since the government was guaranteeing those loans, banks had no problem giving those loans to people that were completely uncredit worthy. And the end result of that is that now we have something like 1.6, 1.7 trillion outstanding of student loans, a huge part of which can never be repaid back. So, this is one of the many examples of how government creates a problem by trying to fix another one. And then the problem they created is much bigger than the initial problem they were trying to fix. DAX approaches 50% from 2003 low and 8,000 level. Yeah, we already had a look at DAX. And as I said, I think that a huge level that will attract the market here is going to be the 61.8 from the financial crisis, from the 2008 financial crisis low, which comes at 7,496, 7,500, let's call it. So I do think that this level might actually act as a magnet for the market. Now, having to do with USD yen, and I don't know if Blake is back. He can interrupt me at any given point, so he can take over. Keep in mind that USD yen got rejected from the confluence of, we can zoom in so you can see it, the 61.8 of that last move lower and the 200 daily moving average. So pay close attention to the USD yen here, because we might have seen an interim high, and we might be in the verge of seeing another breakdown in USD yen and another move lower. So bottom line, against Friday's high, which is at 108.50 roughly, I think that risk reward definitely favors short positions in USD yen, with whatever implications that also has for risk elements. There's no question about it. There are obviously implications. Now, having to do with some of the mainstream FX pairs, here is Euro USD. Euro USD did also find support at the 61.8. Look at this. 61.8, and actually we never managed to close below the 200 daily moving average on a daily closing basis. So 200 DMA is at 111, the 61.8 is at 110.50. So let's say this area between 110.50 and 111 should be strong support. As long as this is holding, we might see Euro USD make another attempt to move higher from here. So keep that in mind. Now, having to do with the pound, I have to say that the pound is looking very, very sick. There's no question about it since we break through that. Having said that, though, I'm very curious to see what's going to happen from this area. And why do I mention this as an important area? Because we had that long-term descending wedge. Its broken trend line resistance is currently passing from 122.30. Might act as support. That's why I've marked this on my chart as a pivot area. Now, people that are Forex Analytics members, they've already seen this chart from our weekend analysis, and needless to say, and not for advertising reasons, but I really strongly believe so. There is no better time that you can be part of our community. You can't imagine how active our chat room has been and how many great ideas are being exchanged there. We have substantially reduced our patterns in play because of the inflexibility they have. They work much better in a low volatility market, in a lower volatility market, not low volatility market. But we are giving out a lot of trade ideas in the chat room continuously, right? So I do think that if you're staying home, if you're trading from home, there isn't a better group of people you can spend your time with than the people in the chat room. Many good traders that know what they're doing, and trust me, many times I've got an idea from the people there, and I've had some great trades just because I saw an opportunity that I would have otherwise missed. We're not there to copy each other, although I understand that some might want to do that. We still suggest that everybody should filter through their ideas based on their own criteria. But trust me, you're going to be full of ideas in there. So I strongly suggest that if you haven't tried Forex Analytics, this is the perfect time to do so. Banks do things like that when people massively wish to take money out, but you're right, it's risky. Yeah. Saudi Arabia will produce oil at maximum capacity, Aramco CEO says. So that comes to the question of crude, and I've already mentioned that before. I think that crude is going to be breaking lower once again from this little consolidation that we had. I do believe that during this period, we're going to see crude trading near 20. So I'm not buying crude oil yet, but I do believe in the not so distant future, within 2020, we're going to get amazing opportunities to buy crude and crude oil companies. I'm not talking about the small ones because those are at huge risk of failing, but I'm talking about companies that have been around for like 100 years, like BP, Shell, you name it, that, their stock price is going to, be at, at a very, very steep discount, even to their tangible assets. Okay. So the next downside target for crude, in my opinion, if we're talking medium term, is the 161.8% extension of this little rebound that we had last week, which would point to a move towards 21.75, 74 to be exact. So I do think we might see high 20s even within a month. I mean, I don't consider it unlikely at all. I think that we might even see temporarily high teens, 17, 18, 19 crude oil price. We might get there. But trust me, I'm going to consider that like, a gift horse. I'm not going to pass that opportunity to be long crude and assets that are related or correlated with crude. But be patient. This is not the time to be long. At the moment, in my opinion, there is still a huge risk to see much lower prices from here. Okay. So if you're looking to sell, you might even want to do that now, because if we go down to a 4-hour chart, here is a 4-hour chart. You might want to view this as a triangle, right? Something like this, or like this, probably this. Yeah. So, that would imply lower lows, much lower prices, right? So that's what I think about crude. Now, having to do with your other question with natural gas, it is very much worth noting that we definitely have a divergence here, right? So natural gas is still holding up quite nicely from that huge level of support. We had indicated that since a long time ago, down at 160, 163. Now, obviously, it's not easy for crude to go to 20, 17, 22, and natural gas like appreciating, right? But it seems like natural gas might overperform crude in the period ahead, and perhaps this divergence is also going to help us time better when a good buying opportunity is going to be around for crude. That's what I think about it. 18 would be nice as shown. Yeah, absolutely. I mean, also another thing you have to watch about crude that's going to be a good indicator is contango, right? That was a great indicator during the 2016 period when we were hitting lows. It was a great indicator to actually, start realizing that the bottom is probably close. So, that's another thing to look for. Coach, speaking about it, I don't know if you want to, probably it would be a good idea if you wanted to call Girl, if she has like, if you have an opening. I think it's going to be great having
I have her on
with
the
us.
schedule this week.
Oh, you have
That's
her this
something.
week on schedule. That is
Yeah,
perfect.
and Kirk
That
is
is
Kirk is here this morning. He has a lot of experience in the oil market. So
perfect. Yeah,
Yeah.
the best people to talk about crude and the potential downside. Kirk had already written an excellent article about crude, in essence, saying that he would be extremely skeptical to go into buying any
because of their
companies.
balance sheets. Yeah.
Yeah, because of the balance sheets, but he does believe that crude is going to produce a very nice buying opportunity, and I'm 100% on board with that. I do believe that crude is going to produce within the year a magnificent buying opportunity. I also believe that a limited amount of companies are also going to produce a buying opportunity, but only those that have been around for many, many years and have much healthier balance sheets. I would definitely stay away from the smaller ones because they can definitely go boom. So yeah,
Yeah. If you don't believe it, look at the miners.
oh yeah, especially junior miners. I mean, they
Yeah,
have
show
been
a GDX or GDXJ or Nugget. Nugget's a big ETF in juniors. Yeah.
GDXJ. That's the junior gold miners. Just look at this. Speaking of which, another huge divergence, if you ask me, Dale, because look at this. Let's take both GDX and GDXJ. So, as I said before, for those that don't know, GDX is the gold miners. GDXJ is the junior one, so the smaller ones miners. But look at this. Let's overlay GDXJ with gold. So look at this.
You didn't get the performance on the upside, but you certainly got punished on the downside.
Exactly. Look at the high correlation as gold was moving lower, and look at the incredible divergence. Now, if you zoom in, you're going to see that normally
it merged with the volume bars. I've never seen that.
Yeah, normally correlation is very high, but zoom out a little bit to go up to when we actually peaked in 2011 and look at this huge divergence.
Yeah.
And it's not looking that much better if you do the same with gold miners, not the junior ones, right?
The seniors.
So in my opinion, this divergence is definitely going to close at some point. And if you're asking me, the miners will have to do a lot of catch up at some point.
The juniors, you mean?
Both of them.
Oh, okay.
But as we've said in the past, don't invest in juniors unless you know very well what you're doing, because you might find yourselves investing in companies that the price is going to go to zero. So, investing in junior miners is something that only somebody that has a good knowledge of the sector should be doing.
No, I like that. Don't invest in juniors. Like Donald Trump Jr. said he was buying the market last week.
All in. Yeah, at -5% from the all-time highs, he was going all in.
Or how about this? Don't invest like juniors, not in juniors. Anyway, I don't know. Yeah, you know what? Larry Kudlow said buy the dip, and I sent him a tweet. Okay, Larry, where should I put my stop? I bought the dip, and he didn't respond.
Yeah, something, I don't want to badmouth people, but there are some people that really you have no alternative in doing so. Larry Kudlow is either of the two. Either he's completely ignorant, or he's just the mouthpiece of every government that is willing to throw some money at him. It's unfortunately he did the same thing with the Bush administration, and I'm not saying that because he's a Republican. I'm sure he would be the same type of guy that if a Democrat asked for him to do the same thing, he would do it. You know what I mean? So he was touting that was the best story never told. That was his saying for the Bush economy, that it was the best story never told. just
Okay.
before we had the
I don't remember
2008
that.
financial crisis,
Oh,
and he
gosh.
was doing the exact same thing for this administration. In essence, he's willing to
Yeah.
to market any type of economy like the best one ever. So
I look at myself as kind of like the Larry Kudlow of Forex analytics, but at least what I'm selling
is a
is
good
real.
product.
Yeah.
Yeah.
Anyway, okay. So
We have Kirk with us.
yeah,
Perfect.
go ahead and do it. And okay, everyone, stick around for Kirk. You're gonna get some great. He also has some ideas about how you invest around this Corona. So Kirk, I'm gonna get you all set up here now. And you're unmuted now.
Screen.
Welcome back, Kirk.
How are you doing?
Good. Glad you have a mic.
I do.
You sound clear. Sounds good.
I'm traveling to Arizona for spring break, or excuse me, spring training, which of course got canceled.
Oh, okay.
I'm flying back tonight a little bit early.
All right. So you're not practicing social distancing yet, huh?
We are. We haven't done anything
forced.
fun, that's for sure.
Yeah, I mean, you're being forced to practice it because you would have been out there watching the Cubs or something today. So,
Right.
so go ahead, take it away. I know you brought some things to the table. Before you get going, though, Kirk, the whole team appreciates the nice things you wrote about us in that Seeking Alpha article.
Yeah, well, hopefully a couple people are joining us today. Can you see the screen where I have the Twitter feed?
Got it.
Yeah. So back on January 22nd, I tweeted this, that coronavirus would probably be, the most important story going. And this was pretty ahead of time. I've been following the whole disease X research probably for 15 years now. So when I saw this, I knew it'd be a pretty big deal. In some of the articles I wrote and webinars I gave, I told folks to probably get to 75% cash. And so a lot of my subscribers are super heavy cash, and they're not traders for the most part, so they're not shorting or anything. They're just waiting for their opportunity. And I think that you're going to get a pretty big opportunity with what you guys were just talking about, with just a handful of oil stocks, but really oil more than anything. I think oil is going to be a heck of a buy. I know you guys chart, so I'm not showing you anything new. But look at how amazing that price around $77 a barrel is. We broke through it.
Mm-hmm.
It was support for a long time, and now it's resistance. And now we're way down at what, $29, $28 a barrel?
Yes, almost at the 16 lows.
So you have this other level at about 42, is it? 40, 41, 42, right in here.
Yeah, that was a January low, 42 about.
Yeah, and that had acted as support for a long time, right? So now it's going to be resistance, and I think the big question is, when do we break through it? Because certainly once a whole bunch of companies, and you guys don't need this chart because I know that you guys are way ahead of me on that, but when a bunch of these companies go bankrupt, then what happens to oil supply? Does Saudi Arabia drill baby drill forever? I think the answer is yes. They have the cheapest oil on the world. Why wouldn't they pump it? I know we mentioned this last time I was on, but when I was at the Consumer Electronics Show, it's clear that electric vehicles are going to hit really hard in the middle of the decade because of some legal things with mileage requirements. Executives from every company that I heard from said by 2026, it'll be easier to buy an EV than it will be to buy an ICE vehicle, an internal combustion engine vehicle. So all the small sedans, with exception of some sports car and whatnot, some specialty cars, but all the mass market sedans and crossovers are all going to be EV by 25, 26. So what you're going to see is another huge demand destruction event. And right now with coronavirus, that's unexpected, but we should be looking to the middle of the decade for the beginning of the end of oil demand growth. And in fact, I'm writing an article right now that I'm not so sure that we're going to see oil demand growth at all after maybe next year or the year after. And the reason for that is the changes to the economy from coronavirus. A lot of those changes are going to be permanent. There are people throughout corporations all over the planet now who the management would usually keep people coming to the office to work. Well, upper management, the executive level management, is going to change that. So the middle management isn't going to be able to tell people, hey, come into the office because it's what I like anymore. There's going to be people working remotely forever now.
Everywhere. Yeah.
Yeah. And it was a change that was gradually coming. And this is something that's going to push us forward 5 or 10 years. And think about what that does to oil demand. If
The morning commute.
Yeah, what if 10 or 20% more people work from home?
Like we've been doing for 20 years.
Right. And I moved my office home 5 years ago now. And
Kirk, I didn't know that you had done a lot of, it's the first time I heard you use the terminology, disease X. Is that the term?
yeah, disease X is after SARS. The World Health Organization and other health organizations became very concerned that there could be a disease that would kill 10 to 30% of the people who got it and spread like a cold or the flu. So this disease that we're seeing right now, they've been looking for it. And the thing that's this is basically a dry run, I guess. This spreads like the flu. So it wouldn't be unusual for a third of the people on the planet to get this. But we're lucky that it only kills 1 or 2% of the people who get it. So, and generally people with compromised immune systems or who are older.
I think, Kirk, that the actual number is much smaller than 1 to 2%. And we can't be sure about it because, as you know, many people are asymptomatic or
Right.
almost asymptomatic, so they never get diagnosed.
Correct.
So I'm not saying that to say that it's a disease we shouldn't take, seriously or whatever. Obviously, we have to be very, very careful. I mean, for example, me and my family, we've taken precautions since 2 weeks ago, but I'm just saying that thankfully, I think that the actual percentage is smaller than that.
But I think you're probably right.
Know because we don't know the exact number in the denominator. You know what I mean?
Yeah, we never
Correct.
will.
Yeah, and we never will.
Absolutely.
And
so
one more thing, since I interrupted you, I want to, whenever you get to it, I want to know what you think they're going to do with the US sail industry. Do you think they're going to bail them out? What do you think is going to happen? Because that's going to be huge for the US.
With which industry?
The shale
Shale.
industry.
I don't think they're going to bail out shale.
There's your answer.
Yeah.
Okay, so how do you think this is going to play out?
So in short, I think you're going to see about half of the shale industry go out of business. And there is plenty of money out there in private equity to buy the good assets. So there's no need for the government to come and step in. There's no reason for them to bail out the companies. Now, the banks who are going to be on the hook for a lot of the debt, they're going to get a lifeline, and you're already seeing that. So it's not going to be the shale companies that get rescues. It's going to be the banks that are damaged.
Oh, what a surprise! Do you think that's why they were at the White House? Not to just talk about, our balance sheets are strong and we're going to help people, but they went there because they knew they were going to take some hits on this paper.
Oh, for sure. And I think that we've known that for a little while now.
Yeah. Before
So,
Corona became news,
right,
this was happening.
right. So, I was writing uh, my plan for the year. I mean, euphoria to despair. I mean, back before Christmas, I told people, look for the market to peak in January and then start selling.
I remember that.
And it's because the valuations across the board were high, right? So you can use any screener you want, and you should have been able to tell that valuations were very high. Or, you go over to Advisor Perspectives with D Short and Jill Malinsky, and they keep track of it for you. This is the third most overvalued stock market in history, and there was no reason without more GDP growth and more revenue growth to expect that to last. Um, I was of the belief that the tax cuts were wearing off. The Fed is basically pushing on a string. And they're going to be able to bail out who they need to bail out, but they're not going to create GDP growth. So this shock to the system isn't, it's not as if we're going to get a V-shaped recovery and everybody's going to make the money back. The money that's lost this quarter and next quarter is pretty much permanent loss. It's not, it's not something that just snaps back. So, if you're running Disneyland, you're never going to get that month back. And if you're running, a theater group or a restaurant group or an airline, half of the airlines are going to go bankrupt. So this is not money that comes back. This is a hole, and we're going to have to fill it in as best we can so that we can climb out. And I think a recession started last week. I don't think there's much, doubt to that. The definition of recession isn't back-to-back quarters of negative growth. The definition of recession really is just an economic slowdown. Clearly, we've gotten that. So as far as the oil companies go, I heard you guys talking about a generational opportunity to buy certain oil companies. I'm not positive there's going to be many to choose from. On this list, these companies already had horrible current and quick ratios. If you take a look at their debt and revenues, you look at it and you go, how do these companies stay in business? And the answer was on borrowed money. So where are these companies going to be able to borrow money in the future? And I think the answer is almost nowhere. So companies that cut a deal with private equity, they'll sell 40% of a company to private equity. You take a look at, Diamondback Energy, everybody likes, but their finances are bad. Why are they paying a dividend yield if they don't have good finances? So will they declare bankruptcy and go through a reorganization? Maybe. Will private equity come in there and buy part of the company, maybe even a majority of the company? Maybe. But what we know is that these companies, their stock prices are just going to go further and further down. I wish, I had talked about Saudi Arabia turning to a drill baby drill program in the past. I'm surprised that it happened the way that it happened. But if you take a look at it from the standpoint of the Saudi Arabians and the Russians, why wouldn't they kill shale during a demand shock? It makes sense for them to kill shale once or for all. And next year, you can believe what you want to believe, but I've been saying this for 6 months now. There's going to be a Democrat president. I think after tomorrow it'll be obvious that it's Joe Biden, and that's going to change a lot of policy. So
okay, I want to come back to Disease X. Okay. So everyone is just assuming there's going to be an election. So we're going to see some problems like during the primaries. There's such a conflict, and you did studies about Disease X. So is it like it was in the pandemic of 1918 where Disease X will make its first appearance, which is happening globally right now? And then in 1918, everyone thought the Spanish flu was over. They went out on Armistice Day and celebrated the war is over, the flu is over, and it came back with a vengeance for the second wave, and that was the more deadly of the two. Do you think that maybe we peaked, this virus peaks for a while in May, and everyone thinks things are okay, and it's now part of just the biology on Earth now, and that it reemerges again in the fall? And if it does, what guarantee is there that there even is an election, knowing that this is more than the presidency for President Trump? This is probably his freedom, because if he loses the presidency, there are going to be a lot of people going after him. I know there's a lot in that question,
Wow.
but what do you think?
All right, so let's stick with
The
epidemiology.
reemergence? Okay.
Let's start with the disease. So this is not disease X. It's not serious enough.
It's not.
And like so you identify, the death rate right now is 3.4%. However, that's mainly in China. As the disease spread, it became weaker because everybody's immune systems beat it down, and it just wasn't as serious in the next. Every time the wave goes further out, it's less serious. So we probably will see, if you segregate out China, the death rate probably is below 1%, right? We've seen 0.6 and 0.7 in a number of countries, and I think that's probably the reality. This is
So
not
you think it next time it comes around, it doesn't have as much impact as it does this time, and this time's not bad. That's the way it sounds to me. Not that bad.
So I don't want to be light on this, but this is really a super flu, right? This is a super flu. Disease X would kill a double-digit percentage of the people that got it, and that's what they've been looking for since
I see.
SARS.
Okay.
And we do know to focus on coronavirus because there's many strains of it. So we do know to look for vaccines and solutions for this. But what if there's something else? And that's what we're worried about. So I think that the social distancing becomes, a little bit more permanent, more washing hands, more sanitizers. There's going to be more of a focus on killing pathogens on surfaces and hoping that nothing emerges in an aerosol form. So I don't worry too much about this one. What the head guy at the White House said is that they want to shut everything down for 8 weeks if there's more than 50 people. And I know that President Trump doesn't like that idea, but it's the right thing to do, because we know that the pathogen, you can be a carrier for about a month. Originally they thought 14 days, but it's about a month now.
Yeah.
Also, you can get this twice. So there are people in Italy who are getting this for the second time already, and the second time it's incredibly weak. So there's something about our bodies that are learning how to fight this, and especially as it comes in strains that are less virulent. However, at some point it mutates and it turns into something different. It won't happen that fast. It never does. It takes years and years and years for it to mutate into something that is more dangerous. So 5, 10, 15 years out, that's what we have to be concerned with, is this disease won't go away, just like no other disease goes away. But like the flu, it'll change a little bit. And at some point, one of those changes will be more deadly. And that's what we have to keep an eye on. If you take a look at Hong Kong after SARS, they changed the way that they live. And Hong Kong hasn't been that affected by this because they already were practicing kind of regular social distancing, respect everybody's 3-foot rule, you wipe things down nonstop. They've always worn the latex gloves, or not always, but excuse me, in the last 15 years, the latex gloves and the face masks. So I don't want to make it sound like we're all going to walk around with masks for the rest of eternity, but I think that we're going to be more careful, and that this isn't the thing that we need to worry about. It's the next thing, or the thing after that, or the thing after that. As far as Trump goes, all I will say is that when Kamala Harris is Attorney General, he probably ought to make sure he keeps his legal team intact.
That's what I mean.
Yeah, yeah, but you can't. There's not going to be a way for him to stay in office unless he wins
Okay.
the vote.
All right. Well, Bill Maher and I are the only two guys worried about that. All right. So, anyway, so how do we invest around this now? Besides looking for an opportune time to just buy the underlying commodity crude. What do you do?
I think that you're doing the right thing, shorting it down somewhere into the 20s. Maybe it has a hot minute where it's in the teens. But I wouldn't be too excited about oil getting over 42 barrels, $42 a barrel, except under one situation. I think the only circumstance, the only scenario that I've seen that makes sense to me for oil to rebound, because the glut is so big at this point, um, is if there's a war in the Middle East. The only way you see the price of oil really jump is if they start shooting missiles between Iran and Saudi Arabia. As you know, I thought that the simmering would have boiled over by now. With this much pressure on Saudi Arabia and everybody in OPEC, Iran in particular, Iran's very desperate right now. With this much financial and economic pressure on them, it wouldn't surprise me now that the Trump era of cooperation with Saudi Arabia is coming to an end. It wouldn't surprise me to see, some sort of conflict emerge before the election. If you want to get into conspiracy theories, we know that there's been presidents who, make sure that there's some sort of a battle or mini war, some sort of war going on when elections come up, because the old American thing of not changing a horse in midstream. So, you can play that. I'm looking for oil to rise back up to 40-ish. And then after that, unless there's a conflict, I don't know if we break through that 42 level for quite a long time, because if demand doesn't come back as fast as everybody thinks, and private equity comes and gets half of the shale industry out of the bankruptcies, and Saudi Arabia is drill baby drill, what if oil demand growth is done? What if we see, flattish oil demand for the next 7 or 8 years, and then it starts to fall? My original projection had been for oil demand to fall by 2030. I don't know if that's right anymore. I think it might be 2026, 2027. The arguments about emerging markets are just ringing hollow. This idea that there's, more population, therefore more oil, it's just not playing out that way. We've had flattish oil demand for several years now, and I just think that curve is going to keep turning over, and coronavirus is going to push on it. I know that Saudi Arabia would love to have the price of oil up around 70. I just don't know how they're going to get it there without blowing something up.
Yeah. So, you talked about that you would also have some ideas about investing around this coronavirus. Could it be biotech that you're looking at, Kirk?
Well, honestly,
no? Yeah.
I, after many, many years of not being a gold bug,
Oh yeah.
I'm suddenly a gold bug.
Yeah.
I think that I think that helicopter money is inevitable, right? I've just figured that they're going to print money to bail out the retirement system at some point. And I think it's a pretty easy call to see gold going up towards $3,000 an ounce. I'm not one of those $50,000 an ounce guys. I think that, that starts to get silly. But I do think.
Is today a good price to enter, do you think?
I don't even know what it is right now. What is it, 1,700?
Gold?
Yeah.
1460.
No, it dropped
We're
all the way
down
down
$240 in a week.
Yeah, I suppose I'd be looking at it. I mean, I don't know.
And the gold and the shares, if you're looking at shares, gold stocks, they were obliterated.
Yeah, so I'm buying GDX probably today. So I think Newmont Mining is the best gold company on the planet. I've done very deep research on them. Their consolidation, their cleaning up of the balance sheet, their merger with Goldcorp, um, I think is probably leaves them with an awful lot of upside. I have charted them out. I think that they go over $100 a share in the next year or two. But I think that the snapback rally, you have to remember, and I'm sure you guys know this, the gold stocks and gold got beat up because that was one of the only things that were up when people started getting margin calls.
Well, really, if you look at, from 2011, the gold shares never recovered the way the bullion recovered.
Correct.
Okay, so, just like you have problems with balance sheets in oil companies, I believe there are a lot of these miners that, now we're back below production costs and silver and
Right.
gold, that you really have to know balance sheets in mining companies too, don't you, Kirk?
Yeah. So if you go back and just keep going back and you take a look at the GDX chart,
Okay.
right? Because the production, depending on the mine, you're looking at between $900 and $1,100 an ounce for production. If you go way back to the last oil, or excuse
That
me,
was
a
a high
gold
up there.
peak.
That's when gold was 1900, right there.
Yeah.
Okay.
And so why does it make any sense with a consolidated industry that's been cleaning up their balance sheets all during this period here, right? That I'm circling now. This is when they were consolidating and cleaning up balance sheets. This fall off right here is a gift. Now, can it go a little bit lower? For sure. Stock prices can always go a little bit lower. But to be able to get GDX under 20 right now, it doesn't make any sense. So if you just want, if you're comfortable making 50% in a year, I think you make 50% just owning GDX. So I will say I was just down in Puerto Rico, and I was, because I'm checking out the tax code and the climate and the quality of life down there because I'm kicking around moving. And I was hanging out with a bunch of hedge fund guys and day traders, and I asked them, I said, how much can you legitimately make trading 10 pips, 20 pips, 50 pips a day? And they told me. So I know that when I tell people about making 15, 20, 25% a year, which is what I do as a position trader, I kind of get a smirk. So, but with GDX, I think this goes from 20 to 30. You could do that in your sleep if you wanted to catch up on your fishing or golfing because nobody else is going to be doing it for a while.
So what was your conclusion on Puerto Rico as far as it being a good place to relocate to?
It depends on your income and what your goals are. But I think that Puerto Rico is going to continue to get better. There's a lot of opportunity to invest, and the tax code is ridiculously in your favor. So for me, you still have to pay Social Security and Medicare tax. But for me, I would essentially be getting out of the federal income tax in its entirety. So, state of Wisconsin, I pay 6-7%. In Puerto Rico, I pay 4, and then there's no federal income tax.
Mhm.
So, if you're making six figures, there's an awful lot of reason to go down there if you like it. And then I think that there is an awful lot of opportunity to invest there because the idea that it's just some destroyed earthquake, hurricane destroyed island that's going to keep getting destroyed, I think is probably wrong. I mean, I don't know that you want to build 10 feet from the beach anymore, but I think there's a lot of opportunity. The only buildings that have really been destroyed down there are old buildings. Anything that's newer is fine. So, I mean, that's what people have to realize is that the newer constructions held up just fine. But it's, they had a lot of 100, 200, 300-year-old buildings that.
Well, there's also issues with the power grid still. And how about internet for being a trader? These guys didn't have any interruptions?
Right.
These day traders?
You have to be on one of the major telco lines and have the line run right into your house. So you may have to pay a couple $100s to do that.
Okay.
And as far as the energy goes, they have the 5th largest solar and energy storage project in the world going on right now. So I think in the next year or two, you're probably going to see that country just fine on communications and energy. The water is fine. What they don't have, which is weird to me, and I being in the Midwest and understanding farming, they're very bad at food security. And I tell you what, you drop a seed on the ground and it's going to grow. So I don't know why they're bad at food security there, because they import like 70% of their food.
Well, Kirk, I'm just going to interrupt you, not because time is up, but you could buy GDX at 1665 right here.
Yeah, I'm looking at that right now,
Okay,
and I
so
think I'm going to. So
all right.
I think that's the plan. I think that gold is an easy one here. You're gonna see, take a look at the money charts, the money supply chart going all the way back to the Great Depression.
Yeah.
You're gonna see a massive leg up in money supply here in the next couple of years.
Okay. All
I mean,
right. Well,
by
okay.
definition, that's inflation, right?
Yeah. So the best place for people to follow you, buddy, is still on Twitter at Kirk Spano.
Yeah, if
Or
you
you want to give them
there,
your
and
blog?
you can always find me over here at Seeking Alpha. I put a lot of my free stuff out there. And then if you really want, you can go to my website, which is Fundamental Trends. And what I've done is I've set up a free library card.
Oh,
So you can sign up there and get maybe 70% of what I'm doing. So I release it pretty quick.
okay.
So
And
just a
what if
free
you're
library
late
card.
bringing your PDF back to your library? Is
Pardon?
there what if you're late returning
Oh,
your PDF to the library? You get fined?
no, I lock you in a room and you day trade for me. I get 50%.
Anyway, any hot librarians in there?
Her. That's what I have her on the website, man.
I'll tell you what, bro. It's been great having you back, and I wish you a lot of good fortune on your transition to becoming an energy trader, the pure thing, and spend some time in our chat room with traders. There are a lot of crew traders in there, Kirk, and
I just lurk. I've been lurking and
you're
watching.
lurking. Okay.
Yeah.
All right. Well, thanks for being with us. I hope you're right. Do you think we'll have a lockdown here in the U.S. for a few weeks?
Yes, I think that there's going to probably be an executive action that says, "Hey, close everything for a month."
Okay, everything for a month. Do you have enough food at home?
Yeah, I actually went to Costco before I came out on this trip, and I
Yeah.
bought everything I needed except toilet paper.
Oh boy. Okay.
So
Well,
I got my daughter tracking some down.
okay. Otherwise, you can use the newspaper. So everyone, Kirk Spano.
Yep.
You could follow him on Twitter at Kirk Spano. He's a great writer, great researcher, and I've a pretty good feeling he's going to be a very good trader as well. So anything he puts his mind to. Thanks for hanging out with us today, Kirk, and I hope that this spring that's coming up, we're all renewed and refreshed with some nice trading to come into our account. Okay.
Okay, you take care, Dale.
All right, my trading warrior brother, Kirk Spano, everybody. Looking for an important crude bottom and believes that gold shares are a gift down here. Write it down and we could congratulate him or interrogate him next time he's on. Okay. So thanks, Kirk, everybody. See everyone for Turnaround Tuesday. Don't just count your pips, count your blessings. And I think a lot of people are doing that a little bit more often now that they, feel like their lives have changed. And we'll see everyone tomorrow for Turnaround Tuesday. Adios. Thanks, Kurt.
Take care.
You're welcome, Sinatra, Monica, Sean, Forex Gal. Thanks for hanging out with us. See you tomorrow.